Fintech Association for Consumer Empowerment, or FACE members companies reported a near 40% rise in digital loan disbursement volumes and a 43% rise in value of loans in the second quarter of this fiscal compared to the same period last year. Now, this data was collected from more than 37 fintechs who collectively account for about 80% of digital loans by volume. Interesting data that's coming after the Reserve Bank of India cautioned on the unsecured retail segment growing too fast and raised risk weights for lending to this segment. Joining me now to discuss the findings of this report and more is Sugandh Saxena, the CEO of FACE. Sugandh, thanks very much for your time here on CNBC TV 18. If I could start by asking you, what have been the key highlights of the second quarter? 39% volume growth, 43% value growth. Which segments are seeing the fastest traction?
So overall growth has been very, very broad-based, and we are seeing growth, as you must have seen, in companies which are doing small ticket loans, but as well as companies which are doing larger personal loans and consumer loans. So regardless of the scale, regardless of the ticket sizes, regardless of customer segment that people operate, I think we are seeing a growth. Of course, it's uneven. Some companies, as you would have seen, the larger ones, the growth is looking much more promising compared to some of the companies where the scale is less. But growth prospects generally look extremely promising, and the driver of the growth remains really the very strong customer demand. When I say customer demand, it's not just about absolute demand that there is an underserved and unserved market, but also huge customer trust and preference for digital lending. I think that is given, and consistent growth in last 3-4 years is really an affirmation of the strong business model of digital lending and customer really navigating towards that. So this is how I would think of the numbers which are coming to us on a regular basis.
While growth is going to vary across companies, there are outliers in this particular data set as well. Are there fintechs which are seeing an outsized growth, for instance, or how should we read this data?
So, fintech lending is extremely diverse. There are players who are into less than 5,000 category of ticket sizes which are doing, and there are players which are going in upwards of 5 lakh plus or even 10 lakhs, when they go to MSME lending. So when we say we exclude outlier, we want to give a more normative picture of most of the players which they operate, which essentially means in the ticket sizes of 10,000 to 1 lakh. This is where the majority volume of the lending happens. So this is what we meant by excluding outliers.
Sure.
Outliers, they are not outlier as in outlier, but they're outlier in a sense of where the majority lies.
Well, the growth has been strong in the second quarter, but RBI recently has been concerned about the unsecured retail segment growing too fast. And in the data set that you've looked at, are you seeing any concerns or trends of rising delinquencies?
So, in this particular report, we have not looked at, portfolio quality data. But when we look at data from the credit bureaus, which we take for a smaller set of fintech NBFCs, and we qualify these are fintech NBFCs, so there might be a risk with different risk available for overall industry as a whole. But when we look at the fintech NBFCs, we do not see decline in the delinquency or the portfolio quality deterioration. In fact, we see an improvement in the portfolio quality. But again, we are only speaking on behalf of fintech NBFCs and not the larger unsecured universe which is up there.
So for the fintech NBFCs in this ecosystem with this higher risk weights for unsecured retail loans, they have partnerships with banks and NBFCs as well. How does it impact the entire ecosystem?
Headline numbers will tell you that it's more about, the growth moderation. But I think there's more to it, which is extremely positive, where we see that it will allow the industry to shape in a mature way, including improving the portfolio quality, diversification of product and customer segment, and also diversification of funding resources, because there has been a over-reliance on small segment of banks and NBFC. This is what the policy intention is, and we hope that it plays out in the same fashion.
Okay, so, with this diversification that you spoke of, do you expect the growth momentum in digital loans to slow down in the coming months because of this RBI measure on consumer loans?
For this year has gone, this quarter has gone. So I guess this quarter would remain extremely robust, also because it was a festive season. Perhaps in next 3 to 6 months, the numbers would tell the story. And I don't think it would be a, sort of similar effect on all the players. You will see different players, experiencing different impact on it. Some of the large companies which are well capitalized and have a very robust governance and risk management framework will continue to thrive in this environment also.
All right, Sugandh, that's all the time we have here on Startup Street. Thanks very much for joining in. Pleasure speaking with you.